लाइट डाल कर
Hello and welcome to the Business and Banking Dialogue, ladies and gentlemen. A warm welcome to you today, Friday, our bi-weekly show. All indications of the economy are showing good levers, that by which we are saying that the economic recovery seems to have started. So, like I said, and the center's reforms in agriculture, labor, mining, and other sectors are likely to sustain, according to the CEO of NITI, Amitabh Kant, who says that all signs indicate that India's economic turnaround is gathering momentum. The recovery in GST, e-way bills, electricity, petrol, and diesel in September 2020 provides a meaningful signal of a broader economic revival, according to Aditi Nair, who's from the ICRA, economist ICRA. Today, ladies and gentlemen, you may have seen the governor of RBI. He upgraded the FY21 GDP forecast from minus 9.5% in October to minus 7.5% today. A sharp correction of 2%, which also indicates that the RBI feels that the economic revival is on the card, is very much perhaps visible. So the signs of recovery seem to be there in almost every sector of the Indian economy. But is that enough? Is that something else we have to do? Let's debate on these points and look at how is it possible, what are the things to be done in spurring the economic growth through banking. To discuss on today's topic, what can be done to spur the growth of economy, we have today in our show two banking experts who have tackled many challenges in their past by leading the banks, respective banks, Mr. Mohan Tanksale and Mr. H.S. Upendra Kamath. Let me give you a brief about them. Mr. Kamath is a former CMD of Vijaya Bank. Earlier, Mr. Kamath was the MD and CEO of Tamil Nadu Mercantile Bank Limited. Mr. Kamath started his career as an officer with Union Bank of India, and he rose to become the position of GM in 2006 and was promoted as ED in Canara Bank in March 2009. So he has a long span of almost 43 years in the banking service. Mr. Mohan Tanksale, the other panelist whom we have today, is a career banker with over 4 decades in Indian banking industry and has led 3 major Indian public sector banks in this period of 4 decades. He was the chairman of Central Bank of India until 2013. He has served as a the Chief Executive Officer of the Indian Banks Association, IBA as we call it, during which he successfully represented the entire banking industry. Mr. Tanksale is presently engaged as an advisor to SWIFT India, and he's also a member of various governing councils and committees. So let's get on with the discussion. Welcome to the show, Mr. Kamath and Mr. Tanksale. Good evening and a very warm welcome.
Thank you.
Thank you. Thank you.
Thank you.
Thank you so much.
Thank you. Ladies and gentlemen, you are also, you're all watching the show either directly through the YouTube, through the EPS channel, or also through Twitter, LinkedIn, Facebook, and YouTube. So, yeah, a warm welcome to all of you. So, Mr. Kamath, with what has happened today and what the governor also said today in today's RBI projections, will the economy return to growth in quarter 3, 21, much ahead by a quarter of the earlier forecast? What is, in your view, is it positive? Because today he has corrected by -2% already. What are your thoughts?
Yeah, thanks, KK, for having me on the webinar.
Thank you.
Mohan, how are you? Hi.
Thank you. Hi.
In the 9th October, policy announcement,
Yeah.
Reserve Bank of India did mention that Q3 GDP growth will be in the negative territory of 5.6% and is likely to turn positive in Q4 by about 0.5%. This was the forecast of RBI on the 9th of October 2020.
Yeah.
In their November bulletin, they did mention that if the recovery, level sustains for 2 more months, then there is a bright possibility of the growth in GDP turning positive in Q3 itself. In today's policy announcement, as you rightly mentioned, the annual forecast for FY21 is upgraded from -9.5 to -7.5, and Q3, which was earlier negative, is now estimated to be positive by 0.1%, and Q4 is upgraded marginally from 0.5% positive growth to 0.7% positive growth. Overall, there appears to be a lot of optimism, in the air. Now, this optimism, stems from the fact that there is a effective management of the COVID, pandemic.
Yeah.
There is to a large extent, lifting of the lockdown-related restrictions. Interstate movement on, goods and services. Today there are no restrictions, and the supply chain disruptions have been eased to a very large extent. There is a rapid pickup in the economic activity, and overall there is a better liquidity in the financial system. And all these augurs well and is in line with the predictions of the Reserve Bank of India, as well as some of the economists. And these factors are expected to contribute to the GDP growth coming to the positive territory sooner than later. But I think we need to be slightly cautious because there are certain unfavorable tendencies as well. To list out a few, the inflation, the CPI inflation is still very high, upwards of 7%, and even in the RBI policy today, a lot of things have been mentioned about the estimates of the inflation levels. There are unseasonal rains, and we do not know yet the impact of this on the agricultural produce. There are some areas in the country where we have witnessed a resurgence of the pandemic, even though sometime in the past it came into good control, and therefore there are certain local level area restrictions, and some of them happen to be industrial and export centers as well. The fiscal deficit of the country is still high. This year it is estimated to be 12% for the full financial year 21, and the festival season is now behind us, and therefore there is a likelihood of slump in demand. Now these are some of the unfavorable factors. What should we do? We should continue to focus on medium term and long term reforms. We should, launch more demand spurring, relief schemes. And overall, we should ensure that the economy picks up, the employment, increases. But according to me, KK, the bottom line is that we should, all the rest of the things are numbers. They are mere numbers. They can undergo change with the passage of time. But the minimum most things that we should ensure is that the poor in the country should not go hungry.
Yes.
The people who are sick must come what may get medical attention. And, the people who are looking for jobs, there should be possibilities of providing them, gainful employment. According to me, these three are the minimum most, things. Thank you,
Very well,
KK, and back to you.
Very well, sir. Excellent, sir. I think providing jobs definitely is one such big focus. So, if you were to look at the one good indicator of revival, Mr. Tanksale, is the recovery of banks from P&L point of view. Okay, so most of the banks we have seen, they have posted good results. Almost all the public sector banks have posted very good results. Besides, of course, the private sector banks always do that. Okay, does this indicate the banking sector is geared has it geared up to enable India incorporation to kind of a recovery, so that the India incorporation runs its full steam?
Well, while I appreciate and really rejoice as a public sector banker seeing at such good quarterly results, but then the lurking fear and the facts which are all known to us, that some of these results which are looking very, very positive have got something at the back of it. You have got the last 6 to 8 months of moratorium support, the Supreme Court decision not to declare NPAs. You must have read in the newspaper that the banks have declared that these many NPAs accounts are NPAs, but we could not declare it NPAs, so could not provide. Some proactively provided a little more on those accounts. But having said that, I will not say that on the balance sheet everything is good. While everything is not good on the balance sheet, and let me tell you, you look at the CRISIL report, you look at the S&P report, and everybody has predicted that Q3, Q4, your 8% NPA, which earlier they had predicted to 14%, they are predicting 11%. That's one positive. So I'm a very optimistic person, and I believe that the NPAs, why 11%? It could even be contained at 10%. But what is really not understood correctly, banker after banker is saying that not much of traction is coming on the one-time settlement or one-time restructuring request, particularly from the large corporates. Very few large corporates. At the same time, yesterday's news says that IBA probably wanted or would like to request RBI to extend it up to March, so that the invocation, which was to be done by 31st December, could be extended by 3 months. And there is a reason for it. See, if you really look at even today's announcement by the Reserve Bank of India, the issue is that of the supply side. The inflation is because of more of a supply, not less of a, it is less of a demand. Having said that, you read yesterday Niti Aayog Rajiv Kumar's interview. This very clearly said that probably the private sector investment at this point of time in the given uncertainties are not likely to come aggressively. And thus the government spend will have to be increased towards the investment. As far as banks are concerned, let me tell you, my industry is extremely comfortable on liquidity. We are definitely not very comfortable on the capital side. The capital side, probably the government will have to support. But then, yes, you have some kind of a room available where if the viable projects are available, the funding will be done. But having said that, the banking industry is supporting the MSME, left, right, and center, the agriculture sector, the retail sector. And I think if you look at those sectors, those are definitely showing the growth. And thus, I feel that you can see the positivity into it. The only feel I have is that there could be a drag the moment a Supreme Court decision will get reversed, which we all want. We don't want to really contain the NPAs like that. No, NPAs, the spade is should be called a spade. But then what will happen? That what is most important is finding out a proper solution. And my appeal here is that if you delay the solution, because the moment you give
Yeah.
us some kind of comfort by not declaring, your solutions get deferred, which is very visible by not many companies going for a one-time restructuring. So we would like to say that the thing should be accepted on the face of it, and then address it through a proper restructuring resolution mechanism. Kamath will agree with me, when we were in the chair, we used to count the expected credit growth as a 2.5 times of a repo rate.
Okay.
Given that on a 4%, 10% growth should be, in any case, should be there.
Hmm.
I
Yeah.
remember when 6% repo rate was there, we used to have a growth of 14 to 15%. Some kind of a thumb
Right.
rule we used to
Has to be
apply.
there. Yes.
Uh, if that's the case, why not 10% growth? I think the credit growth will happen. I'm not talking about the GDP growth. I'm talking about the credit growth. And
Yeah.
if that credit growth of 10% can contribute substantially, we are saying positive 0.7% as declared by the governor seem to be possible, feasible. The only thing that, as I've been saying in the past also, that banking is one component of the whole growth drivers,
Yes.
credit providers and supporters. But the whole ecosystem has to be very conducive for the growth, should be inviting the investors to have a confidence that yes, here is an opportunity. Here I can really create a capacity. The demand is getting created. That's how the things could go. I'm very
Yeah.
confident that the banking sector, although may have a difficulty in
Yeah.
Q3 and Q4, may not be as rosy as Q2, but they are there to support the growth and spur the economy of the country. Thank
Yeah.
you.
So Mr. Tanksale, so the question on the P&L that you said, because we have got a lot of incentives, there's no doubt. I think banking has received a lot of incentives directly from the government as well as from the court in terms of interest on interest, moratorium extension, and non-declaration of some of the NPAs. So are we saying that the balance sheet P&L that has come out is a little bit of a gray area, such that
No,
it's
I
not
would not
revealing
say
a
you
full
can't say
picture?
it gray. You can't
Yeah.
say it gray. It is as per the rules. The balance sheet has been created and certified. So I will not call
Okay.
it a gray. The only
Okay.
thing that will I be able to sustain this kind of positivity, these numbers on profitability, these
Yeah.
numbers on the NPAs, are these numbers sustainable? I have
Okay.
only a little apprehension because of these issues. But having said that, nothing wrong. As I said that, let's call spade a spade, whatever it may be.
Yeah.
But the
Yeah. Yeah.
banking sector is geared up to support the
Yes.
economic growth. That is what I'm committing and feel that
Yeah.
will happen.
If I may, KK
Yeah.
and
Yes.
Mohan, if I may add one
Sure,
small
sure.
point.
Yeah.
Mohan was talking about 2.5 times of the projected GDP rate as the banking system credit growth. One peculiar thing that is happening today is because of the excess liquidity in the system, the short-term interest rates have nosedived. In fact, the banking, in fact, the large corporates have deleveraged to a large extent.
Okay.
Lot of commercial papers, lot of
Correct.
bonds, etc., are being raised. Commercial papers are being raised at a level which the coupon is lower than the reverse repo rate of 3.35%.
Yeah. Right.
And to overall issuance of bond market is to the extent of 1.5 lakh crores. We
Yeah.
need to factor that while we assess the credit growth in the system.
Sure.
On one hand, they have deleveraged by reducing the debt from the banks, and they have started slowly, being dependent on the bond market or on the interbank, money market. So that's the point I was wondering. Thank you. Back to you.
I totally agree.
Yeah.
I mean,
Yeah.
what should come to the bank's balance sheet on the asset side, on the loans and advances side is going to the treasury products. One. And
Yes.
secondly,
Yes.
KK, everyone should know that
Yeah.
India still is languishing on the credit to GDP ratio.
Yeah.
All developing and developed countries are having the credit to GDP ratio of maybe 100%, 100% plus. So we have enough room, let me tell you, for credit expansion and credit creation. And bankers should be open because that is how you make the profits and strengthen your balance sheet. So the only
Yes.
thing that the conducive environment has to be there. And now IBCs and all have brought some discipline, some deterrence have been created towards the wrongdoings. I'm sure that we can see the good days for the
Yes.
economy and the banking sector.
Excellent. Excellent. Thank you. Thank you. Uh, so, ladies and gentlemen, I continue to discuss on the with Mr. Kamath and Mr. Tanksale. You see how the panel discussions are going. Very interesting. It's nothing scripted as such, but this kind of discussions are always healthy and always give you a lot of information. So I'm sure you yourself have a lot of questions to ask. So you could definitely put in your questions, although it's early, you could still put in your questions. I'll try to get it across because panel discussion does take a little time. And if you want to ask a question directly, you're free to do that. You can raise your hand and the digital team will help you to ask a question directly to the panelist. So, Mr. Kamath, let's look at the Atmanirbhar Bharat, okay, a great flagship program of the government of India. What are the proof points to indicate that the banks have made a significant contribution to the success of Atmanirbhar Bharat in providing impetus to the growth of the Indian economy?
Thank you, KK. I will answer this in three parts.
Yeah.
One is I will briefly touch about the macroeconomic indicators because you were asking about the proof points. Second, I will deal with what the banks have done, banks and NBFCs have done, and what is the way forward. This would be the way I would like to address the question.
Sure.
We are all aware that Atmanirbhar 1, 2, and 3. Now 3 is also announced very recently. It is all dependent on, based upon 5 pillars: economy, infrastructure, technology-driven systems and procedures, vibrant democracy, and demand. Now, coming to the macroeconomic indicators, post announcement and implementation of various relief programs under the Atmanirbhar program. If you look at the macroeconomic indicators, the IIP, Index of Industrial Production, which was minus 57.3% in April, in September it is plus 0.2%. 8 core industries, which has 40% weightage in IIP, in the month of April, it was minus 36. October, it has come down to minus 2.5. The shrinkage is, better, very, very low. The PMI manufacturing, index, which was in April 27.4, in November it is 56.3.
Okay.
Which is above the pre-COVID level also. PMI services index was 5.4 in April. Come October it is 54.1%. Unemployment rate in April was 26%. It has improved to 7.8%. Similarly, the Nomura India Business Revival Index also in November is at 87.2. Which is well above the pre-COVID levels. You yourself spoke about Gst Collections, which is in the month of October 1.05 lakh crores. November it is 1.04 lakh crores, which is exactly the same level as the Gst Collections of November 2019. All high frequency indicators like the e-way, bill, the power consumption, the toll collections, the railway freight, etc., are near, pre-COVID levels. Now, this is the proof of the relief measures being largely effective. That is the point, that I was trying to make. Much more, can be done and needs to be done. And this Atmanirbhar program, as I mentioned, earlier, is anchored in bank debt, largely anchored in bank debt. Of course, there are some measures on, the fiscal side also. Now, a few, indicators here, which I would like the attention of the participants to be drawn, is the ECLGS scheme of 3 lakh crores. The last known, information is that sanctions were 2.05 lakh crores and disbursement is 1.52 lakh crores. Now, this is also extended under Atmanirbhar third program to the 26 stressed sectors also.
Okay.
Partial guarantee scheme, the portfolio purchases approved so far is 26,889 crores. Special liquidity window for NBFCs and HFC disbursement is 7,227 crores. The DISCOM, liquidity program, the disbursement is, upwards of, 1 lakh crores, 1,18,273 crores. Street vendor scheme, 10,000 crore earmarked amount, already 1,400 crores is disbursed. So largely, some of these, debt anchored measures, the rollout is, increasingly becoming more and more, effective. So also the various programs like, one-time restructuring to which Mohan referred to. Going forward, what we should do, because I hold the view that still the economy has a lot of pains in certain pockets. A lot of things, therefore, need to be done. And many of these relief programs are still work under progress. And therefore, there has got to be an umbrella action plan at the central level, which has to be broken down to state level and then to district level, with provisos for frequent, monitoring, review, and mid-course correction. Then only these, various relief measures implementation will become effective and efficient. This is, point number 1. We need to make India a large manufacturing hub of the world. For that, we need to have world-class, infrastructure. That is the second point that I wanted to make. The ease of doing business must improve. Today's, policy had some measures on the international trade front. RBI has come out with 3 or 4, measures. Our productivity and competitiveness must improve. In fact, we as a manufacturing, country suffer from this. We also need to produce goods which are of world-class, quality, so that our export competitiveness, improves. Government of India and the state governments must encourage PPP, model, based projects. There has got to be a cultural shift in the working of the public sector, all enterprises, whether it is banks or, any other, thing. We must continue reforms in the areas of land, labor, taxation, FDI, so on and, so forth. Lastly, we must do enough, which I feel we are not doing enough as of now, is to revive the rural economy. We should have, schemes and plans to generate rural employment, which will prevent migration from the rural to the urban side in search of employment. At least, partially, the rural income levels will go up. How can this be done? In addition to, reforms in the agricultural front, there is a need to shift industries wherever possible to the fossils, to the rural areas, apart from, encouraging in a big way agro-based industries. Now, in my view, these are some of the things which we must continue to do, which must get a big focus of the central government as well as the, state government.
Okay.
Thank you, and back to you.
Thank you. Yeah, thank you. I will definitely would like you to talk about 3.0. But before that, Mr. Tanksale, we have various vectors on which we want to run this Bharat Atmanirbhar program. And since 3.0, as Mr. Kamath himself has pointed out, 3.0 is coming up. There are three areas which I see are key for the Indian economy. That is manufacturing, indigenous manufacturing, job creation, and the revival of the housing and real estate sector. Now, these three areas, to enable them, what should the banks be doing, Mr. Tanksale? I think we have lost Mr. Tanksale from the network side. So we will come back to Mr. Tanksale. Mr. Kamath, we could look at that. Let me see if there are any questions that have already come up. So then we could look at that. Okay. Until we wait for Mr. Tanksale to come. So Mr. Khandelwal asked a question. He says, sir, banking industry is having sufficient liquidity with the help of credit expansion economy and will get positive. But sir, the fact is that their bankers are hesitating for financing because of holding them responsible for turning the account into NPA. So this is what do we do for this? Mr. Kamath, if you can answer.
The answer is,
Sorry, I was
debatable, as far as
if I'm not wrong.
Yeah.
I'm back.
No problem. I'll come back to you, sir, Mr. Tanksale.
Yeah,
Mr. Kamath, you can go ahead.
No, this is a very debatable question, and it could be answered answered either way.
Yes.
Now, it is a fact that there is enough liquidity in the system.
Yes.
And therefore, natural result is that the credit should pick up.
Yeah.
But there should be demand for credit also. Demand for credit will come if there are new investments happening, or in the existing industries an expansion is happening, or there is a boom in the economy. These are the three situations based on which the credit growth can happen. Now it is partly true that there is some amount of hesitation. I will not call it as fear psychosis. I know some amount of hesitation in some pockets, but to generalize that would be unfair to the bankers, according to me. Would definitely be unfair to the bankers. I will rather state that the bankers have become more prudent today, and they can certainly not be termed as risk averse. If risk averseness was there, even the 5.6% or 5.8% of credit growth, which we are witnessing today, would not have happened. I mentioned earlier as a supplement, while supplementing to the answer of Mr. Mohan Tanksale about the deleveraging of the debt situation by the large corporates by moving to the alternative source of funding like money market or to the bond market. That is one reason why you don't see credit growth today. You are witnessing only 5.6 or 5.8%. While NPA was an issue, is an issue, and will continue to be an issue. But as a banker, if we assess the viability properly, if we follow the systems and procedures, by and large, I am sure there is no harm will come to the bankers. Here and there, there are cases where even some of us have faltered. Then questions will get asked. Questions will get asked. Ultimately, what will happen is if something adverse happens, then only one needs to worry. Let us not harbor that kind of a fear in us and say that if I take a credit decision,
I will be
I will be held up, something will go wrong. As a banker, lending is our dharma. I am repeating, lending is our dharma. And if NPAs surface, recovery is our karma. This is something as a banker you have to live with. As a banker, you have to live with. You take thousands and thousands of credit decisions. 100%, cannot go right.
Cannot be there. Yes.
We are not God to be 100% perfect. We are human beings. So here and there is an inherent risk of delinquency happening, inherent risk of, NPAs, surfacing. We should all live with it. We should minimize the risks. That is the bottom line. Thank you, and back to you.
Thank you. Thank you. I don't know whether God is also.
I would like to supplement.
Okay.
I would like to supplement what Kamath said. See, we are the bankers when credit decision was taken based on very scanty information, the financial statements and all. And today's bankers are lucky that they have got all possible ways and means to have the information through the credit rating, the credit bureaus, the external data bases. I am myself mentoring and chairing one of the data science company and providing the due diligence. So today the due diligence on the borrowers is much more, I will say effective, and you can take credit decision very nicely. So I totally go with Kamath that lending is our dharma and recovery is our dharma. So I think
Mr. Kamath also went on to say that we are not gods, because only gods can give 100%. But with COVID coming and COVID coming and so many people dying, I wonder even whether God has taken the right decision there.
No, business failures are bound to happen. There is nothing like that. The business failures will not happen.
Yeah, it's true. Very true. So, Mr. Kamath, Mr. Tanksale, when you left, when you lost your network, I did ask this question about 3.0 Atmanirbhar Bharat, and there are three vectors on which where there are issues in the Indian economy. One is the growth of indigenous manufacturing, job creation, and revival of the housing and real estate sector.
Yeah.
Okay. So, what should be done out here?
See, I think Kamath has very well on the MSME part, and the kind of a support which is going to the MSME sector will create large employment opportunity. The only thing is that probably we need to really push some of the enterprises to the rural and semi-urban areas where the job requirement can be really supported. Having said that, if you look at the yesterday's numbers given in the Times of India, the recovery in almost every sector is 90%, which was as bad as 30-40% in the month of April, May, June. Now, if the recovery post-moratorium has improved to 90%, that itself shows that whatever measures have been taken by the government, supported by the banking industry, they are working out. So the employment creation is going to be definitely there. I think the second employment creation, which happens largely is in the real estate sector. And when you talk of real estate sector, housing is an obvious part of it. And for housing sector, under again Pradhan Mantri Awas Yojana, huge support has been given in the Atmanirbhar 3, saying that almost 18 lakh houses will get completed, 12 lakhs new houses will get supported, and obviously with that there will be some boost to the real estate sector. I think the guidelines for the housing finance companies have been reframed so that their focus goes more towards the affordable housing finance and not toward the non-housing kind of a lending which they were doing predominantly. So I feel that the housing and employment will get gradually definitely addressed. But for me, more than housing, employment is more important. And one thing is very clear that whatever migration has happened, 100% is not reversed and will not get reversed. So you have to look at those pockets where the migrants have moved and where there is an opportunity. So there I will like to say that there are other measures which government has taken with regard to the agri-infra or other initiatives. So one should look at all those initiatives instead of one single thing. So the Atmanirbhar should be seen as a package, and within the package, whatever room is available, I think should be supported.
Okay, thank you. So we had a question earlier. Mr. Kamath answered that, and then this question came of dharma and karma. On that same this thing, Mr. Prabhakar Gasa from SBI, ex-SBI CEO of London, asked a question. He observes that after any financial crisis, banks are always flushed with funds. But the consequence of should not be that bank become reckless in credit expansion. He goes further to point out that global economic recovery is a slow process and it takes almost 3 to 4 years. Therefore, according to him, banks need to be extra careful in credit assessment as it will be difficult to convert rosy cash flow projections to reality. Your thoughts, sir?
So I totally agree with him that now, say, we have seen the three phases in the economy. I'll say 91 crisis, where everything was scanty and we had to do right from resources mobilization to the lending to push the growth through the liberalization, privatization, globalization. Come to the 2000 global crisis. 2008 global crisis. 2008 global crisis, we were sitting on the huge liquidity. And the lot of thrust was there for driving the double-digit GDP growth, pushing money to the infrastructure and all. So while the banks have taken a call, probably we didn't have enough means to really say. I remember some of the bankers having given the statement that while we understand every risk management, we do not understand the risk management where the government will turn the decisions, where the things will go wrong on the policy side. And having said that, I think the prudence lies that today, when you are getting into the manufacturing financing or project financing, which is a long term, your understanding of the project has to be absolutely clear that we do the sensitivity analysis when we finance. But what happens, it is good for the numbers. We never foresee a sensitivity that if the government changes, what will happen? If some problem happens on the licensing, what happens? If the land is not acquired in good. So you have seen that every project has suffered on a cost overrun and the time overrun because of some or the other policy issues. So now that having learned all these crises, two crises we have seen, I think the bankers have definitely got to be prudent. They need not be scared, but they need to be prudent. And I think the prudence have been developed. If you really look at the various programs which have been run in the banking industry, particularly public sector, Ease 1, Ease 2, Ease 3, you might be aware. So, I mean, all those programs are addressed toward the 3R, what is you call revival, restructuring, recapitalization, ease of doing business, developing capacity, using technology, using AI, ML, everything. So I think that what Prabhakar feels is right, but that all those exercise has been undertaken by the banking industry, be it a public or a private sector.
Okay. Coming to the 3.0 of Atmanirbhar Bharat, Mr. Kamath, what is the responsibility of the banking and financial services sector to translate this policy to drive successful economic outcomes?
Well, there are two major, things that I would like to, cover. One is the extension of the ECLGS to these 26 stressed, sectors is one flagship, program, and that is available till 31st of March 2021 only. Out of the 3 lakh crores, already 2.05 lakh crores is sanctioned, and what is available is only 95,000, crores. Now, the estimate is that out of the residual amount, about 40,000 crores is likely to go to these 26, stressed sectors. The moot point, therefore, are two things. Is this amount adequate? Are the timelines enough? Now, either the government or the bankers or both of them should apply their mind to this and see whether the timeline and the resources that are earmarked are enough. This is a step in the right direction because there was no sector-specific, relief to these 26 sectors, excepting the one-time restructuring, which was announced by RBI some time back. There again, the timeline extension is now being sought till 31st of March 2021 because it comes to an end this month, 31st of December 2020. The second major, program is the production-linked, incentive scheme.
Yeah.
Which was already there, PLI scheme as it is popularly known as, which was already there covering mobile phones, pharma ingredients, and certain electronic component manufacturing. Now it is extended to 10 more sectors. 10 more sectors are now identified and covered. The additional outlay is of the order of 1,45,980 crores, and the program will be live and running for a period of 5 years. Whereafter, I am sure there has got to be a sunset. These kind of programs cannot, run ad infinitum. It has to come to an end. This particular scheme is, well-founded according to me because, this will attract investment in manufacturing, sector. It has the potential to promote, exports. It can make India an integral part of the global supply, chain. It can also, give relief to the sectors which are stressed. And above all, there is a possibility that if this is run well, this can reduce imports from, China, which is a much talked about, topic today. The incentives range from 4% to 6%. The success story of the PLI, to quote you one example, is that when it was introduced and made applicable to the mobile phones, the mobile phone manufacturing in terms of value was only 18,900 crores, in FY15, and in FY19 it rose to a whopping amount of 1.7 lakh crores. Now that's the kind of potential that is there because you are incentivizing manufacturing. And I would like to add one more point. Our target under the Make in India program was to take the share of manufacturing in the GDP to 25% from the current level of 15%. Unfortunately, we are tottering around the existing level of 15-16% only. To be in the reckoning, the share of Indian manufacturing to Indian GDP must ideally reach 25% over a period of next 3 to 5 years kind of time frame. Now, what is the bank's role in all these things? As I mentioned earlier, lending is our main function. Therefore, we have a responsibility to make available adequate credit. I am underlining to viable ventures. To viable ventures in a very prudent manner, we should make available credit. We should make available credit in adequate quantum. We should make available credit at affordable rates. As bankers, there is a dire need in view of the past not so satisfactory experience. Bankers should be trained to understand risks, and risk mitigants must be implemented well. There has got to be a huge educational program undertaken in the banking system to give minimum appreciation. Appreciation to at least a few important risk aspects. It should reach the last man in the banking industry. That is why. That is how I will put it. We will do well if we avoid risk concentration. We should not get overexposed to any kind of sector. I repeat what I said earlier. We must be prudent. We should not be risk averse. That should be the underlying principle. Fund only viable projects. This is the minimum things as a bank. What we can do to uplift the economy and bring it back on rails, and to regain our past glory, if I may say so. Thank you, and back to you.
Thank you, sir. So, Mr. Tanksale, let's look at this vocal for local. So, that has been that is encouraging local manufacturing, local products rather than something else. So, what are your views on the contributions being made so far by the banks? So, I'm looking at banks' contribution in this aspect of vocal for local. Is there any, and does it help in boosting the economy?
Yeah. So let me say that while the coinage vocal for local has become very popular now, it has been in the practice much before. Let me tell you, we as a banker, we have always seen that if there is a product or a manufacturing which is helping toward the import substitution, even the government under the foreign trade policy had such room for considering the import substitution. That was not related to then issues like China and all that,
Yeah.
the vein. It was purely that what is that which can be done here, and essentially the country has been always on a very high trade deficit. So one was we started with the import substitution. Then came Make in India. Now Make in India, which was launched in 2015, because I was at the helm at the IBA. Let me tell you that so much efforts have been put in by the banking industry that the lending is done. And in the Make in India, you know that even the smallest finance was available for a lakh of rupee for any rural entrepreneurs. And that was the beginning. But now at this point of time, let me tell you, the vocal for local takes an importance from a perspective that can we create our products globally competitive.
Yes.
Most important is that all of us have to understand that if China has been able to flood our markets, it was essentially because most of the markets are price sensitive or quality sensitivity.
Yeah.
And when the markets are price sensitive, you have to make the balancing between the two, that your product is competitive on the price as well as the quality. So I am very sure when the Prime Minister talks about it, he is very, very conscious about it, that it should not be competitive only because of the pricing support. It should be competitive based on your efforts to make your product globally competitive in terms of quality also. And if that happens, I think it's possible, because we have the obvious opportunities through demographic dividends. We have obvious opportunities through by inviting the people. I think the investors are still open to come to India. So many, people who I don't want to say going out of China, whether they go out of China or not, but they're willing to come to India. And as rightly said by Mr. Kamath, the production linked incentives, where we have identified good number of champion sectors. If those champion sectors are supported, it will feed the domestic, it will feed the global. And if you are doing this right balancing act, that vocal for local is not only import substitution. It means that you do the production which is globally competitive, which meets the requirement of the domestic market, and you are able to take the product to the global markets. That is what is my thinking. And I'm sure the banking industry, as both of us are very strongly saying that banking industry will be very, very open for lending to all such opportunities. Because again and again, need not repeat, if you don't lend, why do I run the bank? I don't run the bank for where do I pay the interest to the depositor? So I have to earn only by lending.
That's correct.
That is all on the vocal for local, I'll say. And I feel, let me give you one or two examples. The fintechs of the country, as you know that the India fintechs are now really having a global recognition. There are a number of initiatives which have been taken on the agriculture side. There is post-harvest financing on the what you call warehouse receipt through a blockchain mechanism. The one of the bank declared that they will have the what you call assessment of the farm using the satellite and using the drones and all those things. So I think there are a number of things which are happening in India, and we are hopeful that the vocal for local will go strong.
Excellent. So I had one, Mr. Tanksale, we talked about the balance sheet, and panelist, sorry, we have a question to you. Just to cut short the question because it says, I would say thanks to RBI to instruct the bankers to declare the all NPA to clean the balance sheet. But still the whole NPA is not yet declared. Sir, recently reduced NPA is actual or is it a window dressing? But I think we did answer this. How do you see this reduced NPA?
I will bluntly say that the part of window dressing is over.
Over, correct.
I mean, I don't subscribe to anybody saying that it is a window dressed. Yes, I will admit, maybe 10 years back, on the anticipation, we used to see that, okay, अरे यार एक महीने का तो problem है, come on, let's help them out and see that days is reduced to 89 days. Agreed. But in today's time, there is absolutely no point subscribing to the thought process of a window dressing. Bankers are as open as anything to declare the NPAs because we know, as I said in the past, IBC is available to us. In good old days, there was a drag. The companies used to go to BIFR and for years together, you are stopped from taking any legal action. Today, it's not. Today, if you are not able to resolve and get a resolution scheme available in 6 months of time, by default, it goes to NCLT.
Yes.
The promoters have a threat that they will be out of the business. There was that kind of a threat earlier available. So today, there is absolutely no window dressing or anything. Yes, but as I said in the beginning, if the banks were stalled to declare those accounts as NPA by Supreme Court, those part, I think the banking industry has come out very openly, whether it is State Bank of India or whether any bank, that these are the numbers. And thus, probably whenever it comes to, and everybody is asking Supreme Court of India that you allow us to declare. So where is the question of window dressing? So I think I don't really get scared if the number goes to 14% as earlier said by Crisil, because I'm a banker who has seen 20%. In 2000, the NPS 20% when the one-time settlement scheme in 2002, it had come non-discretionary, non-discriminatory. Thanks to the real estate sector with the booming prices, left, right, and center people came for OTS and the recovery was there. The same 20% came to 2% in 2009-10. So we need not be unduly bothered about the number. We should be bothered about whether it is a genuine business failure, whether it is resolvable. If not, how do you really exit and how much you realize out of it? I think that is what should be the worry about it. And no bank today will go for addressing kind of a thing. I'm very confident.
Very well, sir. Okay, sir. That's very well said, sir. Well, Mr. Kamath, let's look at a different subtopic, if I may say so. CLM, co-lending model, where banks and NBFCs could join hands together to provide easy lending at cheaper rates. So what's the focus out there?
Thank you, KK. In 2018, in September, if I remember correct, RBI came out with a scheme called as the Co Origination Scheme.
Okay.
Where the NBFCs and the banks could join together and lend to the needy. Now, out of the learnings arising out of that scheme, it has been suitably modified, made more effective, and relaunched in my view as a co-lending model, CLM, what we call today, on 5th of November 2020. Earlier, HFCs were not covered. Now, even housing finance companies are also covered under the co-lending model of RBI. Now, the very purpose for which this co-lending model has been brought to the table is to improve the credit flow to the unserved and the underserved, sector. Number one. Number two, to make available, funds at affordable cost. Number three is to leverage and use the reach and penetration of the NBFCs who have a better last mile connectivity.
Yes.
Which the banks do not have. And to leverage on the robust technology most of these large NBFCs possess today, and which they use to the hilt, both in appraisal as well as lending and credit administration too. Now, these are the objectives based on which the co-lending model has been brought out. I will not get into the nitty-gritties of the processes that are to be followed. Let me confine to two things. What are the benefits? What are the flip sides? Okay. Now the benefits are the NBFC borrowers can today borrow at a lower interest rate because the interest rate of banks have come down today drastically, the lending rates. So the beneficiaries would be the borrowers. The second is that banks, we are talking about surplus liquidity in the banking system. And credit marketing, credit underwriting has its own limitations, and therefore by tying up with NBFCs, there is a possibility that the liquidity could get deployed, at least a part of it. As far as the NBFC is concerned, there is a better churning of their funds. They will underwrite, then they will transfer it to the banks, and therefore there is a better churning of their funds. Instead of taking 100% risk on the NBFC today have a 80-20 sharing. 20% minimum is what is prescribed under the regulations.
Yeah.
By mutual agreement, it can be 60-40, it can be 50-50, it can be anything. The minimum from the NBFC side is 20, and therefore there is a risk sharing. You need not bear the entire 100% of the credit risk. If banks lend directly to NBFCs, then our exposure is on the NBFC. And in addition to the usual credit risk, credit default risk, banks who lend directly to the NBFCs also undertake one more risk, which is called as the disintermediation risk. Our money is on lent to the needy people. The underwriting standards are that of the NBFCs, but our ultimate repayment to the bank will depend upon the borrowers whom these NBFCs have chosen. And therefore, there is an underlying disintermediation risk, which will not be there in the co-lending model, because the bank's exposure is not on the NBFC, but on the ultimate borrower. And there is provision for ex-ante due diligence, etc., etc. Now, briefly, these are the advantages. There are two types. One is committed, one is discretionary under the co-lending model. Under the committed model, if you enter into an agreement with the NBFC that you are committing to take over your share of the lending, then you are bound by that. You have to take. Hello.
Yeah, go ahead.
Can you hear me?
Yeah.
So we need to therefore build in the agreement with the NBFC what are the credit underwriting standards and systems and procedures that the bank would like the NBFCs to follow, so that we are within the overall guidelines of RBI, because credit underwriting is something which cannot be outsourced under the existing regulations. And according to me, there needs to be more clarity on this particular issue. Under the discretionary, banks have a discretion to take or not to take its share, so that is why it is called as a discretionary. Now, what are the other issues? One issue is that why co-origination model, which was launched in 2018, has not worked, is because of the IT related issues. NBFCs have one IT platform, the banks have another IT platform. Both do not speak to each other, and therefore there is a need for interface or middleware or whatever we call. There are IT related challenges in this, which needs, in my opinion, to be attended first before this co-lending model becomes successful, and it
Yeah.
does not go the same way as the co-origination model has gone. Therefore, IT compatibility is something, IT facilitation is something, IT enablement is something which must be ensured upfront. Now, NBFCs are governed by India's laws. Banks are not.
Yeah.
So therefore, accounting standards are different. How do we go about this? Now, HFCs are covered, and even NBFCs do lend against mortgages. Who will create the mortgage?
Yeah.
How both will get a charge? Something which needs to be looked into and decided upon. CERSAI, as I understand, can be registered by only one entity. Now, co-lending has two entities. Who will go about how it can be done as far as CERSAI notification and registration is concerned is another issue. As far as the customer is concerned, the single contact point is NBFC. But there is a provision that one single consolidated statement of account is to be given to the customer. So this, IT must facilitate, that combined account.
Yeah.
Single account, statement. Now, these are some of the issues, according to me, which needs to be looked into, sorted out, well in time, upfront, so that co-lending model, meets with the total success. So this is the point that I wanted to make. Thank you, and back to you.
Thank you. Thank you. So we are past the 5 o'clock 1 hour mark. But Mr. Tanksale, can I, if I may ask you the last question?
Yeah.
The country, wants to move, more into the export oriented from domestic consumption to exports. Is a thought process that the government is having and the RBI is having. How should banks gear up to capitalize on the disruptions in global supply chain and government push for exports-oriented economic policy? We have seen some opportunities. While COVID has been a spoiler in many ways, it has also thrown up opportunities. And perhaps, do you see that those are some areas we can, kind of capitalize on?
Yeah, certainly. I will say, I will again try to attract the attention of the audience. Yesterday or day yesterday, the Board of Trade had made a presentation to the minister, and there is a statement that India will achieve $1 trillion export by 2025.
Right.
And that kind of a potential has been identified, the sectors have been identified, and it sounds that yes, it is possible. Now, when you talk of domestic consumption vis-a-vis export, let me tell you that obviously none of the exports will deprive of the need of the domestic consumption. I don't see that is what is the intent. As I see the intent is that while you are servicing the domestic consumption, you should, as I said in the past, that become globally competitive, for which various initiatives are being taken. PLI is one of the initiatives, and let me tell you, we have proved it gradually. I have seen that right from, as I said, 91 onwards, wherever supports have been given, the only thing that our growth has been largely on gems and jewelry. Now in the COVID, obviously you did, and you all should know in gems and jewelry, it is not something which you are producing locally. You are only finishing locally. You are importing the rough, finishing it, and exporting it. So there is a huge import involved into the gems and jewelry. Whereas in the garment sector, you are producing everything locally and exporting.
Yes.
So I will say that if you look at the share of the gems and jewelry, it is more than 10% in the total export. Garment could be 3 to 4%. So you have to, like pharma. Now pharma is our really strength. You have to push all these things and really move towards the global markets, which is very, very essential. See, today you don't have to really be scared about, I don't have the, uh, uh, the reserves. I think your reserves are more than enough. 500
Yeah, yeah,
billion dollars are more than enough you have got with
yes,
you. But what is more important is that whatever global competitiveness you can develop here, to that extent your domestic manufacturing will grow, to that extent your employment will grow, to that extent your consumption will grow. All said and done, if you look at the global economy, we are just 3.5% of the global economy. I
yeah,
mean, if you compare it to any others, forget about China. I think will take many years to reach there. But then there is a big, and that is possible not only by domestic consumption, by a proper export growth, and of course domestic consumption has to be met with. I think that is what is the whole idea of about driving this business. And
okay,
with regard to the global supply chain, let me tell you,
yeah,
probably if the manufacturing is happening in India, obviously you would like to that all kind of ancillarization happens in India, because the cost of transportation and all those things for the parts and everything will go and will be favorable to India. So I think the thing should go favorably. The only thing, intents are good, executions will have to be absolutely meticulous
yeah.
to see what we want to achieve is achieved.
Great. So from both of you, my summary question is that um, do you see the economy is moving to a high growth trajectory?
Yeah, Kamath to start.
Okay. Thank you, KK. Yes, I am a diehard optimist, and therefore,
Okay. Yeah.
I will hold the view that I do, legitimately hold the view that Indian economy is on the path of recovery, poised for growth, in Q3, Q4 onwards of FY21. But the real growth will be witnessed in FY 22
Okay.
because vaccine is around the corner. We
Mm,
have some good positive
good
news
news. Yes.
about vaccines, and therefore the overall optimism in the air is something which is very visible. But I have to sum up, if you permit, we'll make a few points.
Yes.
Currently we have a bank credit led growth.
Yes.
While banks have a role in lending and spurring growth, it is time we diversify the lending sources.
Mm,
Otherwise, this black swan events like what we are witnessing today will take a toll on the banking system. So
yeah.
therefore, hereafter, I think
Yeah.
the minds will come together and find ways and means. How do we revive or rather improve and make the bond markets buoyant? How can corporates be encouraged to access the bond markets in a big way, the money markets in a big way, the private equities and the foreign investments in a big way, rather than being largely dependent upon bank for a bank credit led growth. This is the point number one that I would like to make. The point number two that I would like to make is it is time the government increases its spending.
Very correct.
Private investments are not happening for whatever reasons, because private investment are profit oriented. Rightly so, I am not finding fault with them, and therefore the government spending must pick up. Only yesterday the government has increased the quarterly cap on spending from 15% to 25%. While I do not know the economics relating to this, the simple point that I am making, wherever possible, government spending has to go up, not being unduly mindful of fiscal deficit and things like that. uh, Employment generation through agri related activities, infrastructure, real estate, construction related, which are highly employment potential activities, must get a encouragement, must get support. Reforms, as I mentioned earlier, in the medium term and long term, land, labor,
Yes.
Taxation, FDI, etc., must happen in a big way. The next thing that I wanted to tell you is the government's spending. It is time we realize then how far behind we are in our investment and expenditure in medical and education.
Yes.
In
Correct.
these two spheres, where we are far below the international, levels, it is time we scale up, so that the quality of education improves. It reaches to the poorest of the poor, and the medical facility also similarly reaches even the last needy, person in the, country. Governance culture is something which has to, find its root in the corporate world and in the financial, sector. And more focus must be on innovation and research and development. These are the way forward. If we do, diligently, meticulously, I think 5 trillion, economy is not a far-fetched dream. It may be some time away, but certainly, achievable. Thank you, and back to you.
Thank you. Yeah, Mr. Tanksale, your summary on this.
I would like to echo what Mr. Kamath has said, and would just like to add 2-3 things. One is when Kamath was talking about the lending part, let me put it in a little different perspective, that what was happening, unfortunately, that bankers were also becoming a part of a risk capital of the project. And that is what has to be really now reduced, and your structure of the project finance has to be really equity and bond debt driven, and not 75% lending, and that at least on the project side. I think that is one point which is very important, that has to be there. To me, the most important part is that, all said and done, while we all say that yes, we are all open, lending is my dharma, and we are doing prudent banking, but then still some term that the whole system, I mean, whether it is the corporate, whether it is the banker, in fact, even the corporate have to learn a lesson that ultimately if the bankers are hesitant, why? I mean, I have not heard that people coming out saying that why this or why, how the corporate should really ensure that the governance are really taken care of, the transparency is maintained. And I think there is a great need that the proper leveling of the lender borrower discipline, the governance, the transparency, if it is maintained, I'm sure the growth is for sure. There is no possibility that there is no growth happening in the system. I think that is what is my take, and there is a huge opportunity for growth.
Thank you. So, ladies and gentlemen, I would like to end today's session. It's been a wonderful session with, as we had last time with Mr. Kamath and Mr. Mohan Tanksale. And we have gone into a lot of details on the topic of spurring economic growth through banking. And thank you for being with us, ladies and gentlemen. And please join me in thanking Mr. Kamath and Mr. Mohan Tanksale for spending time with us and telling us all the steps that are going through or in the process of going through to take the economic growth through banking to our next level. Mr. Kamath and Mr. Tanksale, thank you so much for coming, and wish you good evening and goodbye. Thank you very much.
Thanks.
Thank you, KK, and thank you, the entire team. Thanks for the opportunity. Thank you. Bye-bye.
Thank you, audience.
Thank you.
Thank you.
Bye, Mohan. Bye, KK.
Bye, dear. Bye.
Bye-bye. Thank you.